Over and over again, though, what matters in this market isn't Washington. It's the fundamentals. Today, Deutsche Bank anointed Facebook Instagram as the gold standard for online advertising in a gutsy piece that helped Facebook at last blow through 200. The subtle gist? It doesn't matter what the politicians say. Facebook's users and its advertisers, they love the platform. The pin action here was so positive that even ne'er-do-well Twitter stock went up. As I see it, every day Congress spends focused on President Trump is another day where they're not going after Mark Zuckerberg. Meanwhile, the speculative cohort caught another big Cramer fave. I love saying that. Tesla finally is closing in on Elon Musk's fabled $420 price target. Well, this time the move is fueled by the woes of their high-end competitors in Europe. Stories of delayed deliveries from European automakers are the source of the excitement this time. Drove the stock up $14 to $393. At the same time, fellow cult stock Netflix rallied again, this time by 5 points. Warned that Disney Plus doesn't seem to be eating into their sales too badly. Now, after the close, we heard from Micron, the commodity semiconductor maker that you know I like so much. I told you to expect a good quarter. That's exactly what we got. Even better, CEO Sanjay Mehrotra, and friend of the show, said that the quarter would mark the bottom for Micron's business, meaning the future's looking brighter than the past. No wonder the stock surged in after-hours trading. I expect more bullish semiconductor pin action again tomorrow. All right. Of course, there were some negatives. Whoa. FedEx blew up again. Just last night, stock swiftly lost 10% of its value. Now, I got plenty more to say about this one. It's become a serial disappointer, by the way. But rightly or wrongly, the stock of UPS only declined a couple of bucks, and the news is the market assumed that FedEx's problems are FedEx-specific. I think it's more of a fellow traveler, frankly. Let's not be oblivious, though. I think the transports are an important bellwether for the market, and that ugly quarter from FedEx is bad for the rest of what we call the tape. I don't like the fact that we're now at +5 on the S&P oscillator. That's that company we actually had the Doug Peterson on, the CEO, the other day. I pay for that oscillator, and normally when it gets this high, it means we're overbought and then therefore due for a pullback. So I think you should be willing to ring the register more than you should do some buying. Bottom line, while today's impeachment debate didn't seem to do much damage, a late wave of selling was indeed met with almost no buyers today. And that's not what you want to see if you're hoping for smooth sailing going forward into year end. Still, even if we have a few down days coming up, courtesy more of the market being overbought than the president being over-impeached, market history says it's a mistake to freak out about the impeachment process. Stick around, and I'll tell you why.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.